user point of view, there would be a lot of resistance in the beginning because we have something like 80,000 plus companies in Pakistan. A lot of them still are on manual processes. For them to move from manual process onto XBRL will be a big leap of faith and effort. So I think that's something that we need to be cognizant of. So far, about in December 2017, this XBRL initiative was started. We started to then do a kind of a research on it. We talked to different jurisdictions where XBRL was already implemented. We participated in an international conference to build our understanding. We talked to the XBRL team, which are people who are responsible for developing the XBRL. We have spoken to them. And we have also had meetings with SECP to bring this initiative into Pakistan. And right now, we are now just waiting to finalize a report which we'll be submitting to SECP, which will kind of draw out a top-end roadmap of how the initiative needs to be taken. And I think just before I touch about how the initiative is going to be taken, I need to just emphasize that in a number of companies like USA, Netherlands, India, their Institute of Chartered Accountants have taken a lead role. And I think that within Pakistan also, we should be the people who should take a lead role in the development of the national reporting system. I think the roadmap that we will present will have a number of factors in it. And the first thing is that there has to be political will of the regulators and the cooperation of all the stakeholders. So that's something that will need to be built. Because when I use the word political will, it will also mean that certain legal frameworks may also need to be reviewed, and there might be some changes that may need to be brought into it. The second thing is that at some stage, it will have to be mandatory for all the companies to use XBRL. So that kind of in any case, regulation will have to come out, which will define a timeline in which companies will have to switch onto reporting onto XBRL. We will have to do a lot of research and understand this, so specialists will have to be engaged, and there will have to be a lot of coordination between different stakeholders to bring their point of view and to make things easy for them as we switch over into a new system. Building awareness and training, there will have to be a lot of seminars, a lot of talks, and a lot of motivational talk also to encourage people to do it. And the process is quite long. So it will probably take 5 years before anything tangible is going to come out of it. So that's the kind of time frame it will take. Of course, for the whole economy to get onto this may take several decades, but even the first level of tangible results will take about 4 or 5 years. And we should expect delays. These are national initiatives and national building exercise work. So one needs to have that kind of resilience to carry on with the initiative. But I think this is the thing that we should do, and I have a lot of commitment for that. Thank you.
Thank you, Adnan Saab. I would request you to be 1 minute on the stage only. And I would request Farooq Saab to also come on the stage, just to give a memento to Adnan Saab. Gee, does anybody have any questions relating to the XBRL initiative? Okay. Thank you.
Any questions?
No, it seems everybody's still getting over lunch. Okay. Next session that is going to be now is IFRS 16. As everybody knows, IFRS 16 is applicable for financial reporting periods in Pakistan for beginning on or after January 1, 2019. IFRS 16 changes the accounting substantially for the lessee. The new standard eliminates a lessee's classification of leases as either operating lease or finance leases. Instead, almost all leases are capitalized by recognizing a lease liability and right of use of asset on the balance sheet. There's little that's changing for lessor. Let's see the ISB debrief video to get an overall of the new standard. IFRS 16 is replacing IAS 17, as everybody is aware.
IFRS 16, which replaces a very old lease standard, IAS 17. We really feel there is a need for a new standard because the old standard does not truly reflect economic reality. Companies have a lot of leases outstanding, more than $3 trillion, and only a limited amount of these leases show up on the balance sheet. All the rest, the so-called operating leases, are not shown on the balance sheet, and at the same time they really represent a real liability. And therefore, we think the fact that such a big chunk of liabilities is not on the balance sheet does not truly reflect economic reality. Well, many investors, but not all investors, many investors, the educated investor has been making their own adjustments, multiplying yearly lease payments, for example, by 7 or 8 times. These are very rough estimates. Often they end up overestimating the lease liabilities. And then there are a lot of investors out there who do not adjust the numbers, and they are sort of misled by the current numbers. The big change of the new standard is that in principle all leases go on the balance sheet, both operating and finance leases. The only exceptions that we make are for short-term leases, leases that are shorter than 1 year, and what we call small ticket items, very small leases, for example, for office furniture or for iPads. And that means that the investor will from now on get a good view of all the lease liabilities and not just the finance leases, such as is currently the case. Well, I think there are 2 big benefits to the markets and to investors. First of all, there is a better transparency. There is more insight in the liabilities caused by leases. For example, during the financial crisis, quite a few retail companies went went bankrupt. Their balance sheets were very clean. They had few debts on their balance sheet. At the same time, they had huge leasing liabilities which were not visible. In the future, these will be visible. So that's one. Second, there will be much better comparability between companies. For example, there are now airline companies that own most of their aircraft and finance it with loans. And on the other hand, there are airliners that lease most of their fleet. In practice, they might have similar financing obligations, but in current practice, the company that owns the airplanes has a lot of debt on its balance sheet, whereas the airline that leases most of its aircraft has a clean balance sheet. And that is not a good comparison, and the new standard will create more comparability between these companies. Roughly half of companies around the world do have leases, so a lot of companies will be affected, but especially will be affected companies that have a concentrated use of leases, such as the retail industry, airlines and shipping. Those are sectors that have heavy concentration of leases, and they will be most affected. We do not expect this standard to just be met by enthusiasm. I think investors will largely be enthusiastic, but companies might think that there will be quite a few costs involved. Well, we have tried to keep those costs as limited as possible. And at the same time, I think the standard will also provide management with better insight in the true extent of their lease liabilities. And I'm sure that a lot of managers are not completely aware in detail about these liabilities. And it might lead to better decisions between leasing on the one hand and buying and financing of equipment or whatever you might lease on the other hand. And it might lead to better capital allocation, better management decisions. We have seen before that when we changed the pension standard, that it led to new awareness of companies of the true extent of this liability. And I think the same will occur with leases. At the same time, I am absolutely convinced that the standard will not put the leasing business, the leasing companies out of business, because leasing will remain a very attractive instrument for many companies. It is a very flexible way of financing your assets. And on the other hand, it's also a good way to sort of own assets without having all the full risks of ownership. So I think that leases will remain an interesting business proposition, and we will certainly not put the leasing industry out of business. The effective date of the new standard will be the 1st of January 2019, so that should give companies ample time to prepare for the new standard. I think most questions around this new standard will be about the weighing between costs on the one hand and the benefits on the other hand. That's the reason why we have performed a very detailed effect analysis, which will be published together with the standard. In this analysis, people can see what are the costs of the new standard and what are the benefits of the new standard. And I think when you read that effect analysis, that the conclusion can only be that the benefits outweigh the costs.
Okay. So you can see IFRS 16 will increase visibility of companies' lease commitments and better reflect economic reality. The standard will also make it easier for users of financial statements to compare companies that lease their assets with companies that borrow money to buy their assets, creating a more level playing field. Now, for the next technical session, identifying your leases, understanding the lease definition and exemptions, we have Hina Sadiq, partner Deloitte Yusuf Adil. She has vast experience with managing portfolios ranging from banks, insurance, mutual funds, power sector. I'll request Hina to please come forward and take us through the session.
Assalamu alaikum. I don't know how much I'll be able to take you through the session because I've been given 15 minutes all in all. But I think that with this new standard, a lot of things would gain more clarity, or jo off-balance sheet cheezein padi rehti thi, they would be coming more on our balance sheet, and the financing position would be pretty much more clear than it used to be before. The title is IFRS 16 is leases. Gone are the concepts of operating lease as we understood them before. If there is a contract in which there is a component of lease, there is only one way to recognize it, and that is as an asset. You cannot, there are certain circumstances in which there are certain exemptions available, but other than that, only something that we previously knew as finance lease would survive. The rest, the operating lease concept, does not exist anymore. So let me take you through. This is just a slide that there's significant changes which are expected to the leasing, the accounting by the lessees. The lessor accounting would more or less remain the same, where they show their lease receivables as their financial assets, while the assets that are on lease would continue to be reflected in their property, plant and equipment. The change in the standard would be brought about in the lessee side of the accounting. And entities will need to consider the changes that need to go in their IT systems and their data collection points also before this system, this IFRS can be implemented in full. This is a picture of the change in the financial statements with the adoption of this standard. Under the previous IAS 17, finance leases used to have an asset side and a liability side, while the operating leases were considered as off-balance sheet obligations. Now, there's only one kind of lease, and all leases will be taken to their asset component and their relevant liability component. From the income statement side, now the single expense of the straight line rental of operating lease would now be broken up into two, the depreciation element and the interest element, very similar to the treatment of finance lease in IAS 17. Sorry, technology. I'm going to charge this 1 minute extra. Okay, the cash flows would remain the same. The total cash flow would now remain the same, but the net cash from operating activities is likely to go up, while the net cash from financing activities is likely to go down. Whenever there'll be a lease installment paid, the financing portion of that lease installment would be taken to your financing activity, and the interest paid, not accrued, would be taken to your operating activities, unlike your previous leases where the lease rental was charged in full in the operating activities. Now we come to the main topic. The airplane as this separators has a great significance because it was because of this aircraft or a similar one like this that we are strapped with this standard. According to tradition, the IFRS chairman was once traveling and he asked someone, in whose balance sheet is this aircraft appearing? And apparently nobody had an answer. And when he went back, he realized, and he studied the financial statements of both the lessor and the lessee, they realized that the aircraft is not represented anywhere. So basically, this aircraft is the reason. I wonder where he was traveling. I normally go to sleep in my flights. The scope. All leases except leases for natural resources, biological assets, those within the ambit of IFRIC 12, IFRS 15, intellectual property, and rights held by a lessee under licensing agreement of IAS 38. Only these are scoped out. Other than that, any other lease would be taken to this standard and would be treated accordingly. This probably is the most important area of the standard, and the standard seems to speak a lot about identifying a lease contract. And there's a lot of guidance available in the basis of conclusion. I've tried to put all of that together to come to this. When is a lease identified? At the inception of the contract. The inception of the contract has been defined as the earlier of the date of the lease or the date when principal terms and conditions of the contract have been agreed. Whichever is the earlier date will be considered as the inception of the contract. This lease, once determined, can only be reassessed if the contract changes substantially. Other than that, once you've qualified a contract as a lease contract, it will continue to be recognized as such till its termination. Now here, whether we identify a contract as having a lease component or not having a lease component, this is where a material error is likely to occur. And we may need to involve certain experts in judgment areas where we need to identify whether a contract does have a lease component or not. Can please someone help me with this? Yes. What is a lease? The definition hasn't changed much. It's a contract or a part of a contract that conveys the right to control the use of an identified asset for a period of time against a consideration. Very simple, very similar to the IAS 17 definition. The words that are in bold, the right to control, and an identified asset. These are the two critical elements in this definition, and we're going to further explore what they mean. The right to control means, assess whether throughout the period of use